Good afternoon, everyone. This is Brian Shannon from AlphaTrends.net. Today is Friday, the 19th of October, 2012, and we had a pretty busy market this week. Today, obviously, we finished with a pretty good loss here. S&P lost 1.67% with this big red candle, but the closing numbers for the week, the S&P 500 actually finished positive. We did manage to go back to negative month to date with today's loss, but the S&P 500 obviously held up much better than the NASDAQ, which was down 1.5%. The Russell was down just a little bit, as with the semiconductors, and financials really stood out. But when you look at the action, that's really what's disturbing, is what happened in here, which if we take a look at just this week, the last 5 days, that is, we started out on Monday with let's see, where are we? We started out Monday with a slight gap higher, and then that's where we were here. We moved higher for the first 3 days of the week, and then yesterday we lost the volume weighted average price week to date, and today obviously we really came down hard. Actually, we lost that on the open, but the market came into an expected band of resistance just below that 147 level. In fact, the market's been acting pretty good on a technical basis lately. That is, it's really been following these technicals, and that's what we've been talking about on Alpha Trends, that that we were looking at a 50-day moving average to get undercut in the SPY. We did have that happen, and then as the week progressed, that was last week's video, as the week progressed and we got below that 50-day moving average, we saw that bearish divergence on the MACD, and we're looking for a turn higher. And then just 2 days ago, I was talking about these levels as potential resistance up near 147, the NASDAQ. We'll take a look at those levels, but the market has been acting good technically. Now it's a little bit more uncertain as we get down to this prior level of resistance and what's been support in here recently. Now, we do have lower highs coming in on the S&P 500 with a rising 50-day moving average. So we have all kinds of mixed signals here. And where we had some good signals this week for the long and short side, right now it's looking like we got hit a little bit maybe too hard for one day, and perhaps we're going to need to consolidate a little bit further here, but we do have to remain really on high alert for further weakness. This is an important level that we're at, about the 143 level. It's these prior highs from earlier in the year, and failure of this week's lows near about 142.5 could get us down towards the 200-day moving average near about 140. Well, it's kind of, we've got the 100, the 150-day moving average in there, but when we take a look at that 65-minute time frame, here's a potential band of support that we're coming into. This area has acted as support, so now we will look for this area to potentially become support once again, basically defined by about 142.5 to 143. And what's a possible scenario is maybe a bounce up here back towards the midpoint of this range, and then if we were to come down again, create a lower high, that is, and come back down, I think this level would be likely to break, and then we'd be looking for maybe a test of 140 in the S&P 500. The NASDAQ was a lot worse, and again, it was the week to date basis. For the week, it lost 1.5%. Monthly, we're down 4%. But we started with a pretty good head start Monday and Tuesday this week, as we got beyond this resistance, made some higher highs and higher lows above that 5-day moving average, and then came up to that level again where we were looking for resistance right up here near about that 68.50 level. So we fell just short of 68.50. We broke down through the VWAP yesterday for the week to date here in the NASDAQ, and then we just continued to get pummeled here basically today. Obviously, some of the big momentum names losing ground are big cause for that. But we've got a clear pattern in the NASDAQ of lower highs and lower lows, and now it looks as though the 200-day moving average is very obtainable at this point. We've got the 200-day moving average at about $64.95. So we're only 1% away from the 200-day moving average right now in the NASDAQ, and we look at the weekly chart, that's where we have this longer-term trend line. So coming down to there is a potential level of support. And again, with technical analysis, what we're looking for is potential scenarios to develop. We're looking for key areas such as, the market getting up to a prior band of support here at that 68.25 to 68.5 level. This is where it did, in fact, find resistance. And as I told people in Alpha Trends subscription, which, by the way, is on sale through next Thursday for $399 for an annual subscription. It includes daily videos like this one, as well as stock specific ideas, a chat room, and weekly webinar, bi-weekly webinars, that is, and a chance to really get to understand a process and have some discipline about the market. But we talk about these levels and say, here's a potential band of resistance. We don't want to sell short there necessarily. Now, in hindsight, it would have worked well, but that's not a disciplined approach. Instead, we want to look at it and say, okay, as it breaks below the VWAP for the week to date, as it breaks below support levels, then you can sell short with your stop up above one of these higher lows, whatever's comfortable for you, and then decide how long to hold it. Now, today we had a pretty outsized gain on the downside, and 65 is this prior little level of resistance. When we look at it, that's also again about where we see that 200-day moving average. So further selling down to there would not come as a surprise at all. It doesn't mean we're magically going to bounce, but it's a level to look for the potential of a bounce. If we break this trend line, that's kind of good, because it gets similar to the psychology of breaking the 50-day moving average earlier in the week or last week. It gets a lot of people's attention. They talk about it. They spit out their stocks. And again, I ask the question is, why would you wait for a break of that 65 level to sell your position? It doesn't make sense after the decline we've already seen in these real defined waves lower. So the S&P 500, not as bad as NASDAQ, but NASDAQ could be the example for the S&P 500 next week, and that's something to keep in the back of your mind. The Russell 2000 made it down to this 82 level that we've been talking about, just slightly below it. Obviously, we had the bounce from below that 50-day moving average, and today, obviously, we got smashed down back through it. And this is the level that I was pointing out on Alpha Trends 2 days ago here, with the conjunction of this prior level of resistance and that trend line. So that trend line and the prior resistance right in here came together just above that 84 level and did provide the resistance. That's also where we see that 20-day moving average, the green moving average, is declining. Unfortunately, there wasn't as much opportunity to trade the the Russell, because of this gap lower. That really hurt the ability. If you're of the mind of short-term day trading, there was a good opportunity here and on today's chart. But the Russell 2000 is now coming into an area where this prior resistance has the potential to act as support, but a little further bleeding down towards the 80 level and that 200-day moving average, I think, would be a welcome opportunity to create a little bit more panic and kind of clear the way for this market to kind of settle down and then maybe turn around once we get some more of these earnings digested. But again, so far the earnings has really been not good response. You look at IBM. I recorded a video with Phil Perlman the other day, and it was in the morning when it was still above the 50-day moving average. Well, I said, let it bleed out. It's continuing to bleed out, and now IBM, after their earnings, really got hit pretty hard here. It's got potential for support in this area, but I don't think it's time to be a buyer of IBM. Maybe it's something to keep watching for that potential. I was talking about Intel is it's guilty till proven innocent. It's in a downtrend. There's no reason to think this trend is going to turn around quickly. CMG got smashed today, and this has been Einhorn's big short. He's been dead right about it, and the momentum is dead in this name. These stocks, these momentum stocks just get destroyed. You look at shares of DEC, you look at shares of Netflix. There's dozens of them. Even you can go back to, say, Research in Motion, and these stocks, when they get hurt, they continue to bleed off. Google, of course, had a horrible week. I'd been talking for months about it getting up to 800 by the end of the year. Part of a trading plan is to follow, what the message the market is telling you. And when the pattern of higher highs and higher lows, stops, then you've got to listen to the message of the market. And clearly, this one got hammered really pretty hard here. And I'm not sure what that line was. I believe it's maybe the volume weighted average price. I was looking at the volume weighted average price off the lows from this summer here, and that's exactly what that is. Now, that's a potential level of support, but I wouldn't be a buyer buyer. I wouldn't suggest buying Google. Let this thing bleed out for at least a week or so. And Apple continues to get hurt too. It did have that one bounce at the 50-day moving average, then it got smashed through it. And Apple holders are finding out that all stocks go down at some point. We broke a trend line in here as well today, and perhaps we're going to see the 200-day moving average in Apple. That's certainly possible down at about 585. Longer term, much longer term, we've obviously still got a big uptrend here, but it's been a brutal month for Apple so far, down about $100 in this stock, and the damage just continues. If you look at Starbucks, Apollo Group reported earnings this week. Fortinet, it got smashed over here. These big gaps down are just generally not a good place to buy. It's the first shoe that drops, and then the earnings comes out. Even Coca-Cola is looking bad. Priceline's getting smashed. McDonald's, some of these biotechs that bounce for a day and then come out with news. It's just a bleak environment out there. One of the better areas, stocks, I guess, right now is ISRG. They broke this downtrend line. It's recovered from last quarter's earnings pullback, but longer term ISRG probably still looks good. But I'd let this one settle down this week. And anyways, back to the market. We were talking about the semiconductors and how they got smashed. Continue to get smashed, and we've been talking about guilty till proven innocent, and how this 31.5 level was the area where we were expecting resistance in these semiconductors, and that kind of came together with that declining trend line as well. That let me draw that in on it. Well, I've got it here on the 65-minute time frame. So we're down to 30.5. We've tested these lows, and perhaps we're going to head down even below $30 a share. On the weekly chart, you see this triangle here, but I would look more at the bigger level of support that we've seen down here this year, near about 29.5. Financials, again, were the standout this week, and they, on the weekly chart, they're holding up really well. On the daily time frame, we did make some upside once again, up 1.9%. So you can't ignore that kind of strength, but you can't chase it either, because this group did get hit a little bit today. And you look at the 30-minute time frame, we're starting to maybe become a little bit more neutral in here. I think we're kind of extended and up testing these highs. I would expect them to pull back a little bit next week as well. And then you look at gold. Gold has pulled back to the 50-day moving average, which is rising. And I saw people were looking for buy opportunities in there. And really, you look at the shorter term, the intraday time frame, and look at the direction of this 5-day moving average. We've got the potential to bounce at that 50-day moving average. But again, is there any evidence that the buyers are actually gaining control here? If there is, I certainly don't see it. Even if you look at a 1-minute time frame, the GLD remained below the volume-weighted average price for the day and couldn't take out even this little level of resistance that formed in the second half of today. So these markets are really getting shaken up a little bit, and we've got the election coming up here in a couple weeks. That's probably got some people anxious. Really, the bullish environment for the year is still intact, as we have gains obviously year to date, but those gains, for instance, in semiconductors, just barely holding on to positive year to date. By the way, this I always get questions, what is this software that I'm using? And it's Realtik. Realtik sponsors this every Friday, and again, that's going to do it. I would say next week it's not going to be as clear as it has been the last couple weeks technically, that we really need to see these markets kind of settle down a little bit and try to establish where that support will be found. So if we break about 142.5 in the SPY, then I would look for maybe a quick move down to 142 and then even 140. Anyways, thanks for tuning in. Take a look at that link on alphatrends.net, because that sale will be over next week, and I put together a little video with some details about what's included in the Alpha Trends subscription. Hope everyone has a good weekend, and I'll talk to you next week. Thanks.